Good afternoon, ladies and gentlemen, members and guests. Welcome to today's lunch talk on understanding and navigating the challenges of China's innovations and regulations. My name is Joe Pan, journalist governor, and writing for crypto and digital assets. As a moderator, I want to remind everyone a few things. Today's session will be all on records, and we will live stream on Facebook as well. Here's the short rundown. We will do a short introductions of the speakers, followed by opening remarks, and then rounds of questions, and then open up for Q&A for the floor. Today's sessions will also be recorded later on for postings on our YouTube channel and other social media channels of FCC as well. Starting on my right is Angela Zhang, professor of law, a leading academic, and acclaimed author on Chinese tech regulations. Michael Chow, next to her, is the managing partner and licensed responsible officer, or RO, of Radiant Ventures, a Hong Kong-based VC that co-invests Hong Kong government's innovation technology venture fund. A seasoned investor over 2 decades of experience. And then, of course, we have Juro Osawa, an award-winning journalist from The Information, will provide a correspondent's perspective on the latest developments among the Chinese tech giants and startups. And with that, I'm going to start with Juro. So for those who don't know and have not read The Information, and he's also a good friend and a humble guy, I'm going to actually speak on his behalf, talk a little bit about The Information so you would know the context on this. The Information is one of the most respected and admired media outlets in the tech industry and in the investment community. Some of the information I have taken the liberty from the presentation they had with the journalist conference we had earlier. You can see some of the big names. I won't read them, but you can see those people who say good things about the information. And you also have a really powerful subscriber base, and this kind of set the scene. We're very fortunate to have him to share his perspective of his over a decade of covering tech from Hong Kong and in China as well. And is with 40 members of the editorial staff and an audience of 1.6 million readers, The Information has delivered breaking news about the tech industry. Some of the most important metric is how many of your fellow media outlets quote you, and that's a lot of respect. And the other reason I say admire is also because this is one of the platforms starting as a paid subscription. The information and news is not free, and this proves to the world that information is valuable, and it has been very successful for them. That's why it's admired. So I know Juro is very humble. He wouldn't rave on that, but I want to point it out to all the fellow journalists here. It's not easy to be a journalist nowadays or run a media platform, right? So with that, I want to put one of the recent story and breaking news and from your outlets. And Juro, why don't you give us an introduction about yourself, and also maybe start with answering the questions. You've been in China and covering tech for over a decade. What have you seen? What's the latest sentiment, and what have you seen the evolutions of tech companies and VCs and people who invest in tech?
Thank you for the introduction. And I moved to Hong Kong from Tokyo more than 10 years ago. And that was a very different time. One of the biggest stories at the time was Alibaba, preparing for an IPO in the U.S. And that became the biggest IPO in history, raised $25 billion. And that was really the big story where everyone was talking about it. And that was an indication of how China's internet is really growing to the same scale or even bigger to what we have seen before in Silicon Valley. And then over the next several years, I was at the Wall Street Journal at the time, and a lot of the big stories were about the rise of China's internet and just how much money was pouring into that market. And we had big mergers, M&A deals, and big IPOs, new internet unicorns every week. And so that kind of era. And one of the things at the time I was focusing on was how that rise was closely tied to the US. And there were a lot of investment from the US into China's tech sector at the time. And venture capital in China was very much, the very important part of venture capital in China was funded by American investors, a lot of the US pension funds, universities, charitable foundations. A lot of them are putting money into those Chinese VC funds that invested in all these internet startups in China and that had big IPOs and made lots of money. And and what I have seen over the past several years is just so striking that a lot of those things changed very quickly. And one of the big turning points now that people, in retrospect talk about is the end of 2020 and 2021 in China, when the Chinese government canceled the IPO of Ant Group, the financial arm of Alibaba. And then they started cracking down on Didi, the ride-hailing company. And then they banned online tutoring, which kind of destroyed the whole industry of online education startups. And later, what we started to see was that a lot of Chinese stocks in the stock market struggled after that, but also a lot of the money that was previously funding the rise of China's internet from the US started to pull out or stop making new investments. And in my reporting, I spoke to some of those US investors like endowments and foundations, and asking them why they stopped. And one of the things they mentioned was really the change in China's domestic regulation. So previously, they always expected that regulation would happen in a way that would still allow all the big businesses to flourish, and the tech sector will always grow, and that was always the assumption. But what happened in those series of events in 2021, and also the zero COVID policy later, also the consequences of that kind of changed their perception and created this view that okay, so the things could change in a way that would really destroy some of the businesses and those investors' interests. And so that was, and then we have seen all the numbers of how the US money funding China's venture capital really dropped so drastically over the past few years. So I think those questions probably related to what other two speakers focus on, just how closely tied China's tech sector has been, how closely tied it has been to the US, and how that relationship changed. And now a lot of venture capitalists in China that I talk to, who have been raising money in US dollars, they talk about how challenging everything has become. And some people even think that, is there really a future in this kind of investment funded by global investors? And that would be a question probably for the other.
Really bring us to this particular story you co-wrote about Chinese VC funds suffer from the spike in the interest rates, and others on the geopolitical role between China and the US really put a wedge in not only for the tech company but for the VC. So that brings us to definitely the Michael's domain here. So share with us what you have done in the past 20 years of your investments and in China, and what has been the latest.
Yeah. I guess I'm the man on the ground, right? Looking at companies and the guy who's been affected, right, under the rain or the sunshine. A bit about myself first, just to set the stage. I have been in the industry for 20 years. I started doing venture capital investments since 2000. Right after the bubble collapsed or bursted in the U.S. But I was with with Nomura, with the venture capital arm of Nomura. So Juro and I were talking about so sharing some of the Japan stories. I've been with them for more than 10 years. So and investing in China. So Juro was right that there's a lot of money flowing into China. To give everyone a little bit background of how venture capital industry started in China, it was really 2004 when, well, if you remember, if you go back and check, 2003 December, it was the year or the month when C-Trip got listed. After a long period, C-Trip was listed. I think it was 3 years. It was a period of 3 years because of the tech bubble burst. A period of 3 years where you see no IPO at all for tech companies in China or from out of China. Before that, you had the 3 portal companies, Sohu, Sina, and NetEase. And then C-Trip was listed in 2003. 2004, Tencent was listed in Hong Kong. And then this Baidu was listed in the US. And it was also the same year, if you look at it, Yahoo actually invested $2 billion US at the time, 2004. Yahoo invested $2 billion into Alibaba. Okay, they didn't go listed. It was in 2014. Juro was talking about that when Alibaba got the big listing in the US. But it was in 2004 when they got so-called the first big amount, right? Alibaba, the big sum from Yahoo. And obviously Yahoo was at that time backed by the Japanese investor Masayoshi Son as well, right? So anyway, all this kind of, so when I was going to say that when you have all these big exits and people started to make money and people started to talk about them, and then that sprung a lot of new young startup companies because all these guys, from Sina or from Yahoo or from Tencent, they exercised their stock option. They became, a little, well off. They started to come out and they do their own company. So you have the startup companies coming up, the deal flows, so to speak. The deal flow come, and then you have, at the time, obviously, it's easy to list in the US, it's easy to list in Hong Kong. So exit is easy. You have the deal flow, is the exit, the money will come, right? The cash flow will come. So that was at the time in 2004, all these big US VC funds started to establish their presence in China, whether they started the company in Beijing or in Shanghai. So that was the year when I was there. I went up to Beijing end of 2004. I kind of saw the 1.0, the VC 1.0. So I'm the old guy, right? The 1.0 guy. And then, that's how the whole industry got started. But a little bit about what I'm doing first, okay, before I answer this question. So I'm now with a fund, Radian, one of the shareholder and investor of my own money into the fund and into the GP company. I started with 2 of my partners. So Radian works now. We are on to our second fund. We're a small. We're also a startup ourselves in terms of a fund manager in Hong Kong. We are a local startup. We are now on to our second fund, which was started back in 2018, and we co-invest with the Hong Kong government. By that I mean the Hong Kong government had a program back in 2018 to encourage startup ecosystems in Hong Kong, to build the ecosystem. And they need to encourage local investors or local fund managers to start investing into local companies. And that's how we got selected by the government, and now we co-invest with them. We bring deals from them. For example, because of my knowledge in China, I bring companies from China that we invest into Hong Kong. They come to Hong Kong, they establish their arms in Hong Kong, and and then the Chinese government, the Hong Kong government would co-invest into these companies. So to the question that you have listed, is it the best time to invest in China? My answer would say, of course, yes. Why? Because the VCP industry always goes in contrary to the public market. When the public market does well, everybody go get the money from the IPO market. They go list or they borrow from the bank. It's easy to get money. But when times are bad, no one is investing anymore. The VCP industry is the only so-called investor left, okay, so to speak. So companies go to PE or VC investors for funding because times is bad. And many times, if you look at the data, right, from the LPs, normally a good vintage year, they call it a vintage year. A good vintage year is when the public market is very bad, and because valuations all come down, you can invest in companies cheap, and this is the time to make big deals. Just like 2000 and I would say 2010. Around 2010, that was the year when I can remember a lot of my companies. When I was with Jeffco, we invested, we got them listed on NASDAQ. But 2011, things started to come down. Right? 2011, if you remember, the big tsunami in Japan and all that, things were kind of affected, and the global economy wasn't so good. A lot of the deals were made then, and now you see big companies like Baidu or Shein, those were the times where you make those deals. So I would say that yes, this is the time when the public market is bad. Do not lose your track. Do not lose your poise. Continue to invest as an institutional investors. But of course, fundraising is tough. I have to say, fundraising is tough for us. That's why we are so careful with our bullets. We don't spray them. We never spray. Our strategy is not to spray bullets, but we are careful. We are very careful with what we invest in and what we look at. But there's still a lot of good deals out there. I can talk about a lot of good deals that we are looking at. I can go on and on, but I will leave it back to Joe.
So I think that set the stage for why is it tough to raise U.S. denominated funds and other things, because there are a lot of things in the regulatory framework and environment has changed so drastically. But for us, we want to hear from Angela that's how that has changed and different cycles that has gone through.
Yeah, happy to. And first of all, I would like to thank Joe for organizing today's event, and thank you so much for hosting us. This is a beautiful venue, and my first time speaking at the FCC. I want to start by telling a story of why I wrote this book called High Wire: How China Regulates Big Tech and Governs Its Economy. I actually practiced as a lawyer for many years before I joined academia. And I was an antitrust lawyer. So the first book I wrote, which I published in 2021, was called Chinese Antitrust Exceptionalism: How China's regulation, how China challenged global regulation. And when the book couldn't came out at a better timing, as you may recall, in 2021, China was in the midst of the regulatory storm. And antitrust was the major tool that the Chinese regulators used to discipline the big tech firms, right? In November 2020, China released the internet guidelines to regulate platform economy. And then a month later, on the Christmas Eve of 2020, Alibaba was investigated for the Choose 1.2 business practice. Now, these are not just regular, routine regulatory events. Both events caused huge market repercussions. If you may recall, the next trading day after the announcement of Alibaba's investigation, Alibaba stock tumbled more than 13%, wiping out over $100 billion market cap from this company, right? So all of a sudden, I changed from an obscure antitrust law professor at the University of Hong Kong, all of a sudden become the most highly sought after commentator on Chinese platform economy. I was on Bloomberg almost, every week. Angela, tell us, when is the end of the crackdown? What's going on with Didi, right? I mean, I remember like at the late night, I received a call. It was like, the cybersecurity investigation into Didi. Can you came alive the next day morning to talk about this? So all of a sudden, there's a huge demand in understanding Chinese regulation. And at that time, you realize it's not just antitrust, right? I mean, the Chinese regulators over the past couple of years significantly expanded its regulatory arsenal, right? I mean, from antitrust to data to labor, right? Content regulation, you name it, right? I mean, so that's why I wrote the second book, kind of like a sequel to my first book, but you see the second book is much thicker because now we have way more regulation. But more importantly, law can change. As a law professor, I know how fluid the law is, but I want to have something, that can be useful for the readers in the future time, despite the fluid changes of law. And that's why I created this dynamic pyramid model of regulation, which I will use a little bit of time to explain today, okay? Because I think this model not only helps us understand what has happened in the past, but also have some predictive power for a lot of questions that you might have today, okay? So if we think about regulation, right, this model is actually inspired by the system thinking, which sees our world as a very complex and interconnected system, right? Now, if you look at the Chinese regulation as a system, it actually has three main features. First, I call it hierarchy, which I use to describe the regulatory structure. And then we have volatility, which I use to describe the regulatory process. It's very volatile, as my fellow distinguished speaker have already mentioned. And that tends to lead to a lot of fragility, okay? And then that's precisely what Juno have mentioned. Like you saw, investment sentiments has been so low in the Chinese economy right now. And this kind of regulation, even though many of them, in my opinion, are long overdue, right? I mean, actually, China faced greater demand to regulate big tech firms than in other jurisdictions, but they generate vast unintended consequences. So that's the fragility I described. And now I briefly used the crackdown between 2020 and 2022 as a detailed case study to illustrate this. Now you see this hierarchy. At the apex, we have the top leaders, and then we have regulators and platform, and the participants, right? And so at the beginning, right, during those good old days, when Juro first landed in Hong Kong, right, I mean, you saw that was a booming time, right? The top leadership was very supportive of the platform economy. Back then, there was this buzzword called Internet Plus Initiative, if you may recall. And that was actually coined by Pony Ma from Tencent. He was the one who submitted this proposal to National People's Congress, and that was adopted and helped him got a lot of favorable treatment, despite the fact that tensions actually have started to accumulate at the platform level. There's a lot of complaints to the regulators. But let's bear it in mind, Chinese regulators, they do have a lot of toolkits and have a lot of regulatory tools at their disposal. So instead of using very tough regulation, they resorted to very lax enforcement, right? So one of the big consequences of this is that the information transmission from the regulators to the top policymakers was quite slow. In other words, the top leadership wasn't aware that actually, during this period, the platform economy has expanded recklessly and grown. Like companies like Alibaba and Tencent, they actually became like a duopoly, controlling hundreds of portfolios companies in the platform economy, erected the walled garden against each other, and block each other's access to the ecosystem, and also block users' access to the rival platforms. And that's why you see a lot of complaints coming out from the platform participants. And until this event that we all know about, that Jack Ma's speech, and then Ant Group's IPO, really was the watershed moment in China's regulation against the tech firm. Because you see, ever since then, it's decisively clear that now the government wants to ring in the big tech. Now, in a lot of the media coverage, they tend to portray this as, trying to simplify this incident as China's turn against the private enterprises. I have a different interpretation. I attributed this event fundamentally to the long-standing regulatory tensions between the Ant Group, which is China's fintech giant, and the PBOC, China's financial regulator. And fundamentally, it was because the regulator was concerned that given Ant scales and size, that it might pose a systematic risk to the Chinese financial system. So from the standpoint of a Chinese top policymakers, look, I mean, these companies like Alibaba, Tencent, they're not just selling video games or clothes on Taobao. I mean, these companies are creating financial products that potentially, can threaten the financial stability in the country, right? I mean, given the pervasive influence and their power, that this is kind of like a wake-up call for the top policy makers. And then you see the wind shifted very quickly. And here's the change really started from the regulators started to report the matters to top leadership. And then you see this massive enforcement campaign that started in late 2020 and really lasted for 18 months. It spread like wildfire, affecting almost everyone. I mean, it started with Jack Ma's business empire, but later really spread to the entire tech sector. And then if you may recall, in 2021, President Xi also introduced a slogan called Common Prosperity, which actually was quite controversial at that time because a lot of investors think that, look, I mean, is China rolling back its decades of market reform and going back to the Mao era, right? But if you think about what China was doing with all this platform regulation, in many ways, it's trying to empower these helpless platform participants, be it merchants, be it drivers, right? Be it those contractors, workers, users like you and me, to better bargain and negotiate with the platform, right? It's a process of empowering all these helpless platform participants, and in a way does help, address a lot of the income inequality problem and help, and of course, help President Xi to cultivate mass support. But as we all know, I mean, this very intense regulatory crackdown created a huge backlash in the market, right? I mean, investors panic, and the entire tech sector lost over $1 trillion market cap during this crackdown. And in March 2022, the then Vice Premier Liu He convened an emergency meeting after a massive sell-out of Chinese stocks, sending out a very strong easing signal to the market. And then ever since then, a lot of my students will tell me that now, it's been very quiet. They used to work on the weekends and a lot of overnights, and now there's no more activity, right? I mean, so the regulators return to normal and routine enforcement. Now, I know I have very short period of time to explain the model, but in the book, there is a slightly more sophisticated diagram explaining the connection between these three major features, okay? So when we have a very hierarchical regulatory structure, it tends to lead to a lot of volatility in the regulatory process, okay? And then this hierarchy and volatility both tends to lead to fragility because, now fragility, I use two dimensions to measure it. One is side effects and one is information lag, right? I mean, so but very often you see these regulatory measures, they were well-intentioned, but they generate a lot of side effects. And it took a long time for the regulators or the top policymakers to realize the problem, right? And so by the time to address the problem, it's often too late. And then that's why I call the Chinese regulatory outcome tends to be very fragile, right? I mean, so that's why now there is a crisis of confidence in the Chinese economy at the moment. Now, but one thing I want to mention is that when you have a very fragile outcome, it also creates more volatilities in the regulatory process. And one perfect example was last December when Chinese gaming regulator introduced some draft measures to regulate the gaming sector. And there was one particular article, Article 18 of the draft law, caused a huge panic among investors, thinking that there's another crackdown coming because China was trying to curb gaming activities. But from the regulator standpoint, at that time, there was close the end of the year, and then they just want to take the box and get the law out and trying to solicit some opinions. And actually, most of the provisions are the same as the ones that they previously circulated. So the Article 18 was supposed to be, precisely is to solicit public opinion, right? I mean, it's not aimed to cause market panic, but investors really react very badly to this draft regulation. And then you see Tencent and NetEase lost almost $80 billion market cap because of the law. And then the regulator immediately came out to announce and trying to clarify and also sack the senior official in charge of introducing the rule. And within a month, you saw that that piece of draft regulation was entirely taken off from the gaming regulator's website, right? I mean, so, and so you see at this point, investors are so nervous and so risk averse that they perceive any sign of negative news as another crackdown coming, which even though it was not aimed to be like that, right? But most importantly, I think the major contribution of the book is that we found when you have a fragile regulatory outcome, it tends to reinforce hierarchy because the private investors has retreated, right? Where the state has started to advance in the economy by buying more assets, right? I mean, the state also expanded its regulatory arsenal over all this platform economy, right? And so the states have maintained much tighter control of the platform economy, so reinforce the hierarchy. So now we have a very clear feedback loop here, okay? We have a tighter hierarchy, and that's bound to lead to more volatility, and it's bound to lead to more fragility. And I think this diagram not only explains, right, what happened in the past few years, but also help you predict what's going to happen in the future. Why are we not having more confidence back, right? Because investors see, this phenomenon of state advancement, private retreat, right? I mean, so that is bound to lead to more volatility, and then we are very uncertain about the future outcome. Now, is there a way out of this, right? I mean, this is actually a long-standing pattern of China's regulatory governance, and it doesn't just apply to the platform economy. In the book, I also talk about how China, exactly the same model can fit in to explain how China have dealt with COVID-19, how China is dealing with the property crisis, how China managed the energy crisis, how China dealt with the looming, the big demographic crisis. They all fit into this pattern of regulation. But what has really changed in the past decade is hierarchy has been significantly tightened, right? So without losing up the hierarchy, we can't fundamentally address all this problem that China is facing today, right? I mean, I heard a lot of economists, a lot of policymakers advocating various measures, how we can stimulate the Chinese economy, how we can win back investors. But fundamentally, if we don't loosen up the hierarchy, we can't really regain the confidence because we are not expecting agency to have the autonomy, have the accountability, right? How are we going to have the faith in the Chinese legal system? Because without the rule of law in the legal system, then investors won't really have the full confidence in the Chinese economy. And let me stop here. Yeah.
Wow, that's a lot to unpack. Thank you for that. But want to go back to your points about the application of this model actually fits into other industry and is a structural issue that cascade across the board regardless of industry. And so this can be something very deep entrenched, and we have definitely a lot of events happening in Beijing this week. Not sure when that's going to be, we're going to see a new regulation be introduced, but I want to kind of talk to Michael a little bit. Given this model, given what you have experienced, can you confirm or in some ways to dispel this model? Is it applicable to you, what your companies and investment strategy has been?
Putting me on the spot, huh? Let's put it this way. Over the past 20 years when I've been operating, investing in China, I was based in Beijing for 10 years. it is true that at the time, I agree with Angela that it was a lax, kind of a lax regulation. You know, new regulation came out all the time. Don't be mistaken. You know, in those days, there's always been new regulations, especially with all this, you know, sometimes with the safe, you know, money in and out and all this. We get it a lot because, we are, we are most concerned about cash flow, right? Putting money in and how we get it out from China. It was a lax, overall, it was a lax environment those days. And there's always, when those days when we invest in portfolio companies, the CEO always tells me, I can get this fixed, no worries. I think this, they find ways. They find ways. And these days, yes, today, I think, since the end financial dilemma or the crisis, there has been a real tightening of policies. The officials now will not meet with CEOs that easily anymore, I would say, Even the officials won't even, if you go to Shenzhen these days, they won't have dinner with you. They will not even go out for a drink with you. You go to the office and talk, right? So they are very much aware, and I think it's difficult to get this. But I'm not disputing this, but with this hierarchy thing, with the volatility that comes with the hierarchy, I think sometimes in different economies, you don't need to have the hierarchy thing to get volatility. You get a different president this year, and then the next year the president says all those things has been, will refuse to recognize all those stuff, right? So volatility comes whether it's a hierarchy or not. I think it's more to do with what is happening in today's China. In today China, I think it's a lot to do with the corruption. To me, it's a lot to do with the corruption fighting thing, and that's why you see a lot of tightening of hierarchy of power, because they don't tend to give the so-called authority to the lower ranks anymore because of corruption. We all know, right? I wouldn't say what corruption, but I'm sure you've seen something, before in the country, right? So today, I think corruption, because they need to fight corruption, they are taking powers out from those, all the tiers, right? So maybe that's, I don't know, maybe that's why, there's been a tightening of power up at the top. But put it this way, as far as we are concerned, as we invest in young startup companies, the so-called, I wouldn't say crackdown. I don't, crackdown is not an appropriate word, but I would say the regulation, the more stringent regulation on the bigger, especially in the tech space, is good for younger startups that we invest in, because in the past, as Angela pointed out, you have to choose side. You go with the A camp or the T camp, right? But now you can go on both, and you are not. It's easier to operate as a younger startup. And for example, there's a company that I brought to the Hong Kong. There's a company that does SaaS solution, offers SaaS solution to agricultural product exchange. Think of how a fruit, how a banana or an apple gets from Xinjiang all the way to your home, right? You need a lot of data, a lot of exchanges, and we invested in the company that gathers and provides all this data and analyzes all this data and tells the so-called participants in the market, right, to trade better, right? They now work with any platform, and everyone goes with them and come to them. Even Huawei would come to them and say, hey, let's go and approach, say, Jiangxi province, in one of the Gangjiang city, one of the smaller city, and talk to the government there and help them better manage their agricultural fruits and vegetables trading. So I think the so-called regulation, the higher regulation is good as a whole for China, but it does brings a lot of concern or worries to the public sector investors. So I think it's a problem that I don't know. I don't have the answer, obviously, right? So
So I'm going to ask one more question to, Juro, please.
Couple questions for Angela. And one is the kinds of big success story that we've seen from China's internet previously. So how much of that was really due to the previous approach to regulation, that kind of seems to have forever changed? And then another question is, AI is such a big, part of the industry today, and all the big internet companies developing their own AI in China, and also a lot of new startups coming out, and they're raising a lot of money. But this also seems to require so much regulatory action, and so there's the trend of easing that you mentioned. But if this just AI development is moving very quickly, and it's such a big priority for everybody right now in the world, and I'm sure the government kind of has to balance between regulation and how to allow this to develop in a way that they have to compete against the US with that as well. So how does this affect the regulatory environment?
Yeah, if I may add, not just AI, but also, say, for example, we are now having this VTOL, right? The vertical taking off and those flying taxis, what we call it, right? And that needs a lot of regulation as well. So.
I mean, great question. Great question. So first question, how much China's success was due to the very favorable regulatory support for the tech firms? I can't give you an exact number, but that definitely played a factor. But let's also bear in mind that China has also erected a great firewall that, in a way, acted as a trade barrier for a lot of the US big tech companies to come and compete in China. That said, I mean, I should still, acknowledge the ingenuity and the hard efforts by Chinese own private domestic entrepreneurs like Jack Ma, Pony Ma, and all these successful tech leaders in creating very indigenous, fiercely competitive Chinese consumer tech businesses, right? I mean, think about e-commerce, right? This is a sector that wasn't subject to censorship or information control, but nonetheless, our own domestic companies were able to succeed and successfully outcompeted their foreign rivals. Now, the second question about AI regulation, you are exactly spot on, Juro, that China is actually walking on the high wire when it comes to regulating AI. And fundamentally, as an authoritarian regime, it's very insecure about information control, right? I mean, you saw China was always the first to regulate AI. In 2021, China was the first to introduce regulation to regulate recommendation algorithm. In 2022, China was the first to introduce rules to regulate deepfake. And 2023, China was the first to regulate generative AI. And in August last year, a year earlier, we already became the first country in the world to regulate this transformative technology, right? EU just released its AI Act a few days ago, finally published it. But we are 1 year ahead of the EU in regulating generative AI, right? I mean, so, and that gave people the impression China is going to be very strict with regulating AI because it's need to regulate the information output, right? I mean, that might hold back China's development. But what you saw in the past couple of months after the release of China's interim measures to regulate generative AI is the Chinese government is really treading very carefully in trying to regulate this transformative technology, partly exactly as you pointed out, right? I mean, there is a need to incorporate AI technology into all this industry sector in order to revitalize Chinese economy, right? And now there's a buzzword called new quality productive force. I mean, AI is highlighted as one of them. And there is also a big elephant on the room is like how China can outcompete the US in the AI race, where China is now lagging behind, particularly with generative AI, right? I mean, so China cannot afford to lose this race with the US. And then if we still have imposed very stringent, tough regulation on the sector, it's going to further hold back the sector. So in the past few months, what we observe is that regulation, in fact, is way more relaxed than it seems, right? I mean, the whole piece of the law, the interim measures to regulate generative AI, is very wide, very broad, and actually also very vague. And so that gives a lot of bigger room for the enforcers to how to implement this law. And you saw the major priority with the enforcement of the law is a security assessment requirement, precisely what I'm talking about, the information control, the content moderation requirement, basically requiring those firms that offer publicly available generative AI services to get the license from the CAC in order to provide services to the public. So the priority still remains on how we maintain, that information control. But everything else is secondary, right? Have you seen a Chinese data authority like the EU started to investigate, Baidu or Minimax or other big AI startup for data privacy violation? Have you seen China's SAMR, the antitrust regulator, investigate any of the big tech firms for antitrust violation? Like the FTC and the EU, they are all probing into the antitrust problems of AI company. No, in China, right? I mean, have you heard any investigation about potential IP violation? No. If anything, you see the court is sending very positive sign in trying to nurture the industry by even recognizing AI generative image and give them copyright. China is the first country in the world to recognize copyright in AI generative image, precisely because the court wants to incentivize more AI use to boost the AI industry, right? So we are now at the stage of actually extremely lax regulation of AI, putting aside information control and content moderation requirement. Even with that, China is relaxing that. Before, at the beginning, they mandated this requirement of security assessment for all firms that offer the services to public. And now they are walking it back. Now they are, instead of making it as an ex-ante requirement, now a lot of the firms can just file and register, right? So it become an ex-post requirement, become a registration requirement. So even with that, China is relaxing control. So they are taking a very pragmatic approach, and you clearly see the urge and anxiety from the policymakers and government officials in loosening up regulation in this sphere in order to boost the development of AI.
So with that, I want to open questions, Q&A to the floor, and anyone want to ask questions? Okay, we have one right there. Gentlemen, please identify yourself and keep the question short to one.
Hi, my name is Matt Garland. I'm just wondering when we will enter stage 2 of enforcement for AI, and whether the geopolitical element in this equation will serve to perhaps stave off stage 2.
Would you like to take a crack at that first, and then?
Well, I mean, so if I get your question correctly, is will China ever crack down on its AI industry? Because it will enter into the phase 2 of the intense regulation, right? I mean, yes, I mean, you're absolutely right that geopolitics plays an important role, that China, because want to double down on the AI industry, and that plays a very important factor. When would China ever tighten its AI regulation? I would see, my prediction is that until something really bad happened, like a huge AI-induced disaster or catastrophe that occurred that threatened the social and political stability in China, that will be the time when the government will tighten regulation. And by the way, let's look at the consumer tech business. This sector enjoyed a booming decade of exponential growth with very little regulatory check. Well, and then that crackdown only came in late 2020, right? I mean, because it was, for that long honeymoon period, it was deemed to be aligned with the policy objective of the government, right? I mean, however, that 2020 was a watershed moment because the government saw a crisis coming, right? I mean, there is this incident of Ant Group's IPO that they perceive this is threatening financial stability in the Chinese economy, and that was the point of action, right? I mean, so until something like that happened, I would think that the regulation will continue to be quite lax.
Questions? Okay, we have one lady right there, and then we'll come to you.
Hi, yes. So another question for Dr. Zhang. About when you mention hierarchy, so it seems that the problems or the regulations or the policies all originate from what you just mentioned, a very tight power grip of the hierarchy, and then it causes all those things. So I would like to know more about the leadership is a no-go, right? But for the regulators, for the regulatory framework, as well as for the companies, so do you see any leeway for that to loosen a bit, or for any changes to go for the positive way, so that there would be less volatility that will give some confidence to the investors in a medium or longer term?
Right. I mean, in the book, excellent question. In the book, I try to, trying to figure out a way for us to break this vicious cycle. I mean, but if you look at how China have achieved phenomenal economic success in the past 3 decades, the secret sauce of success is decentralized local experimentation, right? And despite this hierarchy, right, during the Deng era, the government was able to allow the local governments, the central government allowed the local government to take a lot of initiative to experiment with various policy initiatives. And a lot of these policy initiatives become the contribute crucially to China's economic success, right? Because at that time, local governments, local authorities, and agencies, and they do want to take action, take initiative to do things, to experiment, to try it out, to address problems before things become too late. But nowadays, we don't have this political wind and support. This kind of support is waning, right, at the regulators level and at the local government level, that they don't want to take actions, right? Because the more action you take, the more likely you make mistakes, right? I mean, so there's this inertia in the bureaucracy at the moment that you see, unfortunately, unless this is changing, right? I mean, and I hope it will change, right? People often say that, things will get bad before it gets better in China, right? I mean, so curious whether, things will get better very soon, right?
So the lady over there, and if there are any other questions, we may take them all at one time.
Okay.
Gentlemen, so state your question, and then we'll ask your question as well.
A lot of questions may be on the floor regarding this fantastic model, but I would suggest everybody buy the book because I read it. All your answers will be found in that fantastic book of Angela's. I have a question actually for Juro because I feel like you have been asking questions instead of answering them. Actually, I've been a fan of your reporting for a very long time. I've read most of your reporting actually back in the heydays when it was a lot of tech coverage sought after. However, I must be transparent and honest. I don't read as much the information these days because the lack of information out there now on tech coverage. So kind of with this background context of lax regulation and not so lax regulation, how does that impact your reporting life, and how do you see the outlook of tech coverage going forward?
Excellent question. If I don't mind, we handed the mic to the gentleman right here, and then let's get his question, and then let's get them all.
Quick one. What's the next sector that's going to get taken down by regulation?
Okay, so Juro first. You have a fan and a reader. No, I'm on her questions.
Yeah, her questions. So I think there's some changes, but during those boom years, when I first arrived, and then first several years of covering tech, a lot of sources in China, people working for tech companies or investors, they were happy to talk to the media and share their success stories, because a lot of the stories at the time were still a lot of stories about growth. And even when there are stories about problems, they were not often they were not geopolitical problems. So and then I would say a lot of the changes happened, that happened over the past several years, is that a lot of the questions became, some of the consequences of U.S.-China relations. And we talked a lot about China's domestic regulations, but in the same way, we have a lot of pressure from the other side. And we have a lot of companies that are stuck in between, and investors who are stuck in between because they're raising money in US dollars, or it could be Microsoft operating a joint venture in China, or you can have a lot of those situations, and those people who work in those businesses who used to be able to talk and even sometimes be quoted in the media, it's much harder now, of course, for some of them to talk. I mean, some people stopped answering calls, even for, for chatting on the background. And there's, people who still want to have discussions, but it's much harder for people to, talk about this publicly, about the challenges. Like some of the venture capitalists who raising a lot of money from US investors and then investing in China over the years. And they used to love talking about their China investments. But I think over the years, they don't want to be quoted talking about it because some of those US-China decoupling or those types of questions became inevitable. So, and then I think we talked about AI, but it's similar as well. AI development in China, companies developing AI, startups. Also, there's very little incentive for them to talk to the media, and especially Western media, I would say. So, I mean, we still manage to talk to people and, in the industry and still manage to talk to investors or people who have stakes in those businesses. But definitely, yes, it has become, in some ways, more challenging, but it's also quite different, the way you, and what kind of people you talk to.
Thank you. And then, of course, the gentleman asked the question, but before we pose that as the question, I want to ask the last question for the day, and actually to Michael, and bring it back to Hong Kong. So Hong Kong Exchange at one point is the powerhouse out of the 3 major financial hubs globally. Now we're looking at, and you dealt with a lot of IPOs in the past. What do you see the future and going forward for Hong Kong's role in this whole geopolitical role and with the regulation tightening in China?
So your question first before that.
For
okay.
you first.
I think Hong Kong actually stands to benefit from all this cold sentiment, on China. Why I say that? Because as a matter of fact, a lot of Chinese companies now want to move overseas because they have been, during the COVID years, been tightened up. They now learn and know that they need to have a leg out in the rest of the world. I mean, I don't know what you have met, but the companies that I've met, all of them have said to me that they want to start something offshore. They want to come to either Hong Kong or Singapore. Of course, the super rich go to Singapore and they put the money there, but they are not doing much with that money. But those who come to Hong Kong, they are wanting to invest, continue to invest through Hong Kong, into Southeast Asia or maybe even back to China. I think it benefits Hong Kong, and so I think yes, it is true that the stock exchange has not seen so much IPO this year. Its ranking has been has dropped tremendously over the past 2 years. But we are now. I think it takes time for companies to come here and to so-called reestablish themselves, so to speak, offshore, and then prepare for an IPO. So.
And to gentleman's question, which one will be the next industry? Yeah. So I'll pose it to Angela or to
if I can go
Michael.
First.
Yeah, and then you guys.
I think that it's like asking which stock will go up tomorrow. It's kind of but I think my opinion is that the government would not want to crack down on any of the sectors anymore going forward, at least in these 2-3 years, because this is the time that China knows it needs to bring in investments. It needs to, so-called foster investment domestically again in China to encourage people come from all over the world to invest in China. So personally, I'm kind of optimistic that this is not happening anytime soon. And in fact, and that's why I said earlier, we have seen startup companies being able to maneuver themselves much easier in China these days because of the issues that began in 2020.
Yeah, I will briefly mention is that we shouldn't perceive regulation as necessarily bad for businesses in China. And if you look at what happened with the consumer tech business for the first decade, regulation was mostly enabling the industry until very recently, right? I mean, so what I see is, for AI, regulation is actually, for the most part, in my opinion, is an enabling tool for the Chinese industry. It includes very explicit language encouraging the development of the industry, and also urge a very tolerant and cautious approach in regulating the industry. You don't see this kind of regulation in any parts of the world. And where the government have closely integrated regulation with industrial policy, right? I mean, so my prediction is in the coming years, until there's a big crisis looms, regulation for the most part is to enable and to support China's domestic industry.
With that, thank you, everyone. Let's give a round of applause for the speakers. At your table, there's also a brochure for us. If you're not already a FCC member, please take a look at it and take it with you. If you have any question, our staff right there will be happy to answer your question. Thank you very much.